Okay, hi there and welcome to a Theme 1 micro video looking at the economics of the market for avocado. The global market for avocado is just a terrific example of how changing conditions of supply and demand can have a direct impact on the prices that consumers pay for what is sometimes called green gold. Avocados, the simple, humble avocado, fresh or dried, is a very highly traded product in the world. It's not a particularly complex product, but increasingly in demand, especially amongst health-conscious consumers. In the year 2016, Mexico was easily the biggest avocado producer or supplier, with an avocado output of just under 1.89 million metric tons. So Mexico is clearly, you can see from this chart, the world's leading producer and exporter of avocado. In fact, it accounts for nearly 45% of the global avocado market. And then we have countries such as Dominican Republic and Peru and Colombia and Indonesia falling in behind. This chart shows clearly the extent to which Mexican growers have expanded their planted avocado area in a bid to expand production. Now, avocado is part of the staple diet for millions of Mexicans, but if you can increase your productive potential, that offers the opportunity to export the surplus output. And indeed, Mexico is easily the biggest exporter of avocados in the world. Just last year, the value of exports just under $2.4 billion. That's 5 times the exports of Peru and countries like Chile. The United States is the biggest net importer of avocado, as you'd expect, I guess, although there is significant growing of the fruit in California. So here's the chart showing the world's leading exporters of avocado, a good example perhaps of comparative advantage for those of you revising your theme for macroeconomics. In 2017, there was a strong surge in avocado prices, as we can see from this chart, from January through to July 2017, especially because of growing demand in Asian markets across the world, really, and also some supply shortages affecting producers in the main growing countries. Retail prices for avocados soon went up as well, following the increased wholesale price, and health-conscious avocado lovers had to dig deeper in their pockets for their regular supply, perhaps, of avocado on toast. And then see here that in the second half of 2017, and in fact continuing throughout most of 2018, the world price for avocado has been falling back quite sharply. In part, this is a result of much better than expected harvests, which has increased supply relative to demand. And supply has also increased as more growers have entered the industry and invested in crops, perhaps, that are more resilient to disease. So there's been a lot of price volatility in the market for avocado. Here are 2 headlines from the papers. One goes back to 2017. Look at the 2 main supply and demand factors mentioned here in the article: surging global demand and reduced harvests from leading producers. Indeed, Mexico's supply was, I think, short by about 20% in 2017, in part because of poor weather, and also an avocado grower strike that halted some shipments of avocados overseas. But then we fast forward to 2018, and that record price for avocados comes to an end. Big fall in the price. And again, the article at the bottom there hints at one of the major causes. Growers have planted more trees. Estimated forecast is to double production globally by 2025. So we can use this kind of market as a neat little case study in supply and demand factors. Let me just take you through 2 examples of the kind of analysis diagrams you could use in your micro. One would be where avocado growers suffer a poor harvest, where the actual level of supply is less than expected to the market, perhaps because of disease or perhaps because of just poor weather conditions, including, for example, drought. Here's our initial market for avocados. It's good to contextualize the axes, of course. Make sure you know which market make sure the examiners know which market you're talking about. If there's a poor harvest, then the market supply will shift to the left. At each price in the market, less is being supplied. We call that a fall in supply or decrease in supply, or an inward shift of supply, and other things being the same, that's going to cause the equilibrium price for avocados to go up, causing a contraction of demand, and you end up with a higher price P2 and a fall in the equilibrium quantity bought and sold. Inward shift of supply leads to a rise in the price and a contraction of demand. On the other hand, there could be growing global demand for avocados. This indeed is one of the main features. Here's our market for avocados again. If there's an increase in demand, consumers wanting and willing and able to buy more, the demand curve shifts to the right, outward shift of demand, causing the equilibrium price to go up to P2, and supply expands to a new quantity Q2. An outward shift of demand, ceteris paribus, other things being held the same, leads to an increase in price and an expansion of market supply. And if the price did not rise from P1 after the shift in demand, then there will be excess demand in the market. The price mechanism is working here to help ration the available supply and perhaps stimulate suppliers to increase their expand their supply to the market. Now, in a future video, we will look at the avocado market again, and this time focus on the importance of elasticities of demand and supply. We're not going to cover that in this video. Instead, we're just going to take a moment or two to look at some of the factors that might bring about changes in the market price. And here's a little exercise for you to do. At this point in the video, if you want to have a go at this, I'm going to give you here seven factors that could change either market demand or industry supply for avocado. And what I'd like you to do is to think about in which direction the market price is likely to go, and perhaps a brief reasoning for that. If you want to have a go at this, just press the pause button and maybe print off the page or what have you, or take a screenshot, or just jot down the answers. Press the pause button when you're ready. I'll go through the answers with you. So, which direction for avocado prices? We have changes in demand and supply mentioned here. 7 factors. Let's go through them. First one, rising global incomes per capita, an increase in GNI per capita, indicative of increased living standards. What does that do for avocado prices? The likely direction is higher because we'd expect demand to go up. You may have come across this already. This is called the income elasticity of demand effect. Avocados widely seen as a more of a luxury product for many consumers. As their incomes go up, so too might their demand for the product, and that would shift the demand curve out, causing a higher price in the market. Second one, have a go. What did you get for number 2? Better than expected avocado harvest. The price is likely to fall because if the actual supply is better than expected, then that would lead to increased supply, an outward shift of the supply curve. Can you visualize that in your mind there? The shift outwards of the supply curve, and other things being the same, that would bring the price down. What about the entry of new avocado farmers into the industry? Some stories, for example, in South Africa of wine growers, a price of wine perhaps being lower than they expected, maybe the profitability of wine growing not as great. Some farmers deciding to switch production to avocado because they think the expected profit is higher, even though it might take up to 5 or 6 years for a plantation to come to fruit. What's going to happen to the market price for avocado if more farmers enter the industry? The answer is the price is likely to fall. As new firms come into the market, increased supply, greater competition between growers is likely to cause the price to fall. Our fourth factor, changing consumer preferences towards pineapples and kiwi fruit. Well, of course, we can regard these as substitutes for avocado. Well, for those consumers who switch their preferences away from avocado towards pineapples, for example, the likely effect on avocado is that the price will go down. The price will fall because the demand curve will shift to the left. A rising number of health-conscious consumers from Asian Pacific region. So people becoming more health-conscious, likely impact higher price for avocado. That's a factor causing an outward shift of demand. Sixth one, investment in better storage facilities for avocados in a number of countries, perhaps better refrigeration of output, current output of avocados. Likely direction? My instinct is to say the price will be lower, because if you can store avocados more readily, if they stay longer, fresher for longer, there's less waste in the market, and therefore there's an increased supply of edible avocado fruit for consumers. If supply goes up, other things being the same, the price goes down. And the last one, commodity speculators target the fruit industry as offering strong long-term returns. In other words, commodity speculators might think, well, wait a minute, this is a market where the price is rising. Let's think about this as an investment opportunity, perhaps buying, who knows, buying avocado plantations, but initially buying the stock of avocados that's available. That's likely to cause the price to go up in the short term. Speculators, if they're buying available stocks, will be adding to demand. And in the short run, that tends to cause the price to go up. Here's a handy reminder of the effects that either a shift in supply and demand can have on both the equilibrium price and also the quantity traded. You might want to take a screenshot of this little summary table. So I say in the second video on avocados, we're going to look at elasticities of demand and also the importance of elasticity of supply. We're going to use those concepts and apply them to the avocado market. But this video has just been about shifts in supply and demand and the impact on the price. Thank you.